All right. I think we are live. Hey guys. Rocky, you there? Can you hear me?
I am here, Chris. Can everyone hear me?
Awesome. Awesome. Welcome, guys. There we go. Looks like we got a little delay in the chat, but that's all right. We'll give everybody about a minute to come in. I know we were having some issues with the login link. Something got mixed up, but anyway, I'm glad you guys are here. Thanks for coming today. Where are you guys from? Where's everybody representing?
Looks like a full house today.
Nice. Ireland, Croatia, Netherlands, Romania, Florida, Pittsburgh, Gainesville. Nice. India, Canada, Russia, South Africa. Man, I love crypto, dude. It's such an international thing. It's literally borderless. Awesome. Radu, yeah, we are recording this, but sometimes technology doesn't cooperate. So try to stick to the end, guys. Got a lot of stuff we're going to cover.
We're going to answer all the very important questions that are related to crypto, such as when Lambo, or if you're feeling a little bit bearish, when shopping cart. And also just a reminder, guys, you could also buy a fraction of a Lambo too. So
you can? You just the logo?
Absolutely. You can just buy the bumper. You know, that's a good entry starter size on a Lambo. You know, and just don't go all in all at once.
Nice. Hey guys, real quick, can you see my chart here? BTC USD, should see a live chart. It says 85.97.50 is the live price. Looks like we're good to go there. Awesome. All right, I'm gonna flip back over to the PowerPoint, and then we'll jump back into the live charts in a little bit. I'll make the chart a little bit bigger here. Cool. All right, guys. Well, welcome. Today is, what is today? Tuesday, February 13th. We are live, so thank you guys for being here. I know you could be doing anything, and you're here with us today, and that means a lot. We've actually got a really awesome class. I think this is the most important class that I could probably give this year, just because of where the market conditions are right now. And just a few things before we get started. Go ahead and close down your email or Facebook or Twitter or whatever. Just, you know, you're taking the time to be here, which is awesome. And I want you to get the most out of this. And for the next hour or hour and a half, we're going to be just going through a whole lot of really important stuff. We are going to be doing Q&A at the end. So we're going to cut off the chat while we're going through some of the slides and some of the education stuff. That way, we can get through that and then have as much time for Q&A as we can. And I know historically we go over our time. We're going to try to keep this on point as best we can. But with that said, guys, again, thank you so much for being with us. Let's go ahead and get this thing rolling. So what we're going to be talking about today specifically is how to trade the 5 major cryptocurrency market cycles, right? And the reality is that all markets go through cycles. You know, they go through booms, they go through busts, trends, panics, right? I want to show you guys how to look at these markets and how to understand the best strategies to apply for the different market cycles. And then we're also going to talk a lot about risk management strategies. You know, in the crypto markets, I see a lot of people that, just kind of have like the buy and hope mentality, right? I mean, the crypto community has even come up with a word, hodl, right? Hold on for dear life. And while that's funny and it makes sense on a longer term basis, right, to be a buy and hold investor over the years, you can do significantly better by implementing different strategies and understanding risk management. So that's what we're going to talk about today. And first and foremost, just a couple of risk disclaimers. Rocky and I are not trading or investment advisors. This isn't financial advice. There's no guarantees in the markets, right? Crypto is extremely risky, and please don't trade or invest with money that you need for to pay your bills, right? If you take money that you need to pay your rent or your mortgage or to buy groceries and put that in the markets, that's how you get yourself in trouble. And we just want you to be responsible and don't take a mortgage out on your house or buy Bitcoin on a credit card. That's just crazy. It's called risk capital for a reason. And if you trade with money that you've set aside, that you say, hey, I'm okay if I lose this, then you're just mentally trading and investing is going to be much easier, right? You're not going to have that financial pressure. And
before you take the risk, make sure to stock up on some ramen noodles just as a hedge, just in case.
Yeah, tear the Lambo poster down. So here's kind of the schedule, guys. We're going to get moving here pretty quickly. And sometimes I get talking pretty quick. So make sure you have something to take notes with, or, just really clear away all distractions, because once I get rolling, we're just going to get screaming. So, over the next 60 minutes, we're going to be doing some training to show you strategies, and we're going to be going through a lot of charts and slides and technical stuff. And then at the end of this, we're going to be opening up 25 spots in our 8-week crypto trading bootcamp. So for anybody that's interested in that, if you've been waiting for spots to open up, or if you just want to trade with us and learn from us, we'll give you an opportunity to do that. And then after that, we're going to do some just live market analysis, some Q&A, some trade review, and do that for as much time as we can. So that's why we want to get through kind of the training piece of this as quick as possible. And then for those of you that stick with us for the whole class, I'm going to send you a digital copy of my Bitcoin trading book. And yeah, I think you'll really enjoy that. So with that said, I just want to do some kind of quick introductions and also talk a little bit about the basics of crypto trading and how to get set up the right way. And then we'll dive into the meat and potatoes of the strategy stuff, which is the really fun stuff. So my name's Chris Dunn. If anybody doesn't know me, Huffington Post called me one of the top crypto influencers to follow. I was on CNBC's first crypto trader show. And I just really love doing YouTube videos and teaching people about cryptocurrencies. I've been making crypto videos for about 5 years now. I was, I think, the first guy or one of the first guys doing videos on Bitcoin way back in the day. And I just want to give you a little bit of context of my history as a trader. I've actually been trading financial markets for a long time, but I went all in figuratively and literally about 5 years ago. And I'll just kind of tell you that story. So in 2002, when I was in high school, I started trading stocks and futures. And that was really fun. For several years, I traveled around the world and traded from a bunch of different countries. I was a military brat growing up, so I just have always had a passion for traveling and, just doing really crazy adventures. And that was all fun and good until the markets changed after the global financial crisis in 2008. And it wasn't just the fact that the markets fell in 2008. What actually happened was I noticed that it was becoming harder for what I call retail traders or individual traders like you and me to make money in the traditional markets. If anybody's ever read this book, Flash Boys, or seen any of the documentaries about high frequency trading, the short story of this very complex problem is that high frequency computer algorithms have made it very, very difficult for day traders to profit consistently in the legacy financial markets like stocks and futures and options and stuff like that. And so every year I was just getting more and more frustrated because, we had great strategies and we put in thousands of hours of work into developing our skills, but the volatility was shrinking, the trading volume was shrinking, and the competition was just getting more and more fierce. So I went on a search for markets where like the average Joe could have a real shot at making money. And so in 2011, one of my buddies who was working at a pretty big hedge fund at the time sent me an email and was like, hey, Chris, check out this thing called Bitcoin. I looked at the chart, which I'll show you in a second. And I was like, dude, this is a scam. It's either like a pump and dump or a passing fad. I'm like, this looks, I had no clue what it was. And then over the next 2 years, and finally by the early part of 2013, I was like, okay, there's something real here. Like Bitcoin is going to change the world. This is going to be huge. So I took some pretty big risks and I quit what I was doing to focus mostly on cryptocurrencies. And a lot of people that I knew back from the traditional markets they laughed at that. They're like, Chris, you're crazy. What are you dealing with this BS Bitcoin for? But actually my first blog post in November of 2013 about Bitcoin was warning of a bubble. So I was like, look, I think Bitcoin's great and I believe in it long term, but we just went from $100 up to, at the time, like 900. And I was just kind of telling people, like, be careful, And so fast forward, everything started to pay off. I realized that crypto trading was way more profitable than trading the stock market. I would make more on like a single crypto trade than I could make in a year of trying to day trade all day, every day, and my motto literally became trade less, profit more. And so we developed a community of traders and investors and saw a lot of people making life-changing amounts of money. And so I wrote this book on it that I'll send you after the class. And we just have a lot of fun. We do seminars and meetups with our traders. And the last one that we had, I think about 30 people there. And it's crazy because 14 or 15 out of the 30 were from a different country outside of the US. So I love how big of a global market this is. And just like you guys saw that we're in here a little bit early when I was asking where you guys were from. I mean, we literally have people from all corners of the globe. That's what I just love about crypto. And so through that process, one of my students was just knocking it out of the park in 2014. And I'm like, who is this weird guy, Crypto Hustle? He seems to like have earned his name. And he was just like always working, always writing, always trading. And so I asked him to come on board, and that's Rocky. So Rocky, I'll kind of let you introduce yourself, bud.
Sounds good. Name's Rocky, aka Crypto Hustle. I was forged in the blood of the bear and the ashes of the 2014 bear trend. That's where I cut my teeth on trading. So as a result, I've learned risk management and brought that into my career. But a bit about myself. I trade multiple different strategies, predominantly focusing on crypto. Run a site, cryptohustle.com. My Twitter is at Crypto Hustle. Market Watch listed me as one of the top 20 crypto people to follow. And then CoinDesk listed me as basically one of the top 10 traders to follow on Twitter. And yeah, lots of, it's been a great year. It's been a great couple of years really for trading, whether on the upside or downside. And I absolutely love this stuff. I live for trading crypto and found my passion. Prior to trading crypto, I was just working a bunch of crappy jobs. I was not the master of my own time. Now I'm the master of my own time. And there really is a sense of freedom that you get when doing this, or at least I get a sense of freedom anyways. And obviously still a little bit of a slave to the market sometimes. I mean, we are in a 24/7 market, but we do have a philosophy of trade less, earn more. So just going for the A plays, so you save time and really swing hard for the home run. So.
And one thing that I think is really cool about you, Rocky, is that you've actually been actually not just talking about theory, but you've been living 100% off of your crypto income for what, 3 or 4 years now.
Yeah, absolutely. There's one point where I was just all 100% exclusive. Everything I was making was all in Bitcoin. Everything I was getting paid is all in Bitcoin, and so on and so forth. Obviously, with the highs that we've had recently, I've diversified a lot more into pulling money out of the markets and such, but still got a ton of crypto. And yeah, this is my bread and butter.
Yep. Awesome. Well, guys, so that's who we are. That's what we're about. That's what we do. Here's what we're going to cover today. So the first kind of big thing is we're going to talk about how to trade and invest the 5 different crypto market cycles. There's 5 different phases of this kind of big price pattern that we see right now. And I'm going to show you guys how to analyze that and the different strategies that you can apply for each market phase. Okay. We're also going to talk about the best time to invest, right? The key word is invest in cryptocurrencies, and when to stay away, without going off on a tangent. I mean, as a lot of you know, I mean, the markets have just been insane the past few years, and everything trading and investing, let me say this, profitable trading and investing is all about making the right decision at the right time, right? Like you can be bullish on Bitcoin, meaning you think the price is going to go up, but if your timing is off, you could lose a lot of money. So you have to get both of those right. And we're going to show you how to do that. So also we're going to show you how to manage your trades to potentially avoid big losses. One thing that and really the whole reason why I do these videos and these classes and why we've developed the community that we have is to really help people understand risk and money management. There's a lot of people that just get into crypto and they chase the fads and the trends and they end up losing a lot of money. I really hate hearing horror stories of people that, chase the hype and then end up losing 90% of their investment. I want to help people get on the other side of the market, right? I have an abundance mindset where I think the more people I help, the more that's going to come back in good karma. And so that's why we've just been really pouring our heart and soul into helping other people over the past 3 or 4 years in this space. We're also going to talk about how to understand and profit from mass market psychology, right? Instead of being like the gambler, how do you become the casino? Right? That's really what that's all about. So for anybody that's brand new to Bitcoin, we'll just talk about like how to get started, right? If you're like, hey, I don't even know how to buy Bitcoin, I'm going to take like just a couple of minutes and talk about how to get started, and then we'll jump into the strategy. But what is Bitcoin? Well, it's the world's first successful cryptocurrency. And the keyword there is successful because cryptocurrencies have actually been around since I think the 80s, but they've always had issues that kept them from scaling globally. And Bitcoin solved a lot of those problems. And it's a decentralized digital currency. And basically what that means is no government controls Bitcoin, right? It's peer-to-peer. Governments can try to regulate it. They can try to ban it, but they cannot shut it down. It's unstoppable. And now that cryptos are here, we're going to go through big boom and bust cycles, but they're here to stay. They're not going anywhere. And they're basically like digital cash or gold. You can send money around the world quickly for cheap with no bank or government red tape, right? And there's on the blockchain, I mean, you can see transactions of hundreds of millions of dollars being sent somewhere around the world for just a few dollars. It's really incredible technology. And there's a whole ecosystem, there's a whole new economy that's thriving on top of this first innovation that's called Bitcoin. And let's just talk about why traders and investors that have traditionally snubbed their nose at crypto are now flocking to crypto. Well, first of all, Bitcoin was the best performing currency of the past few years. And crypto startups have raised billions in venture capital in just like the last 2 or 3 years. And now every major bank is now jumping on the blockchain kind of buzzword, right? Like everybody, and you'll hear like government regulators and like bank CEOs say the most ridiculous thing, which is, I believe in blockchain technology, but cryptocurrencies are not legitimate. Like there's just so much misinformation being spread around in cryptos right now. And without getting too philosophical, the one thing I'll say is like, this is not going anywhere. right? Like no matter if the price is up or down today, there's always another trade. There's always opportunity. And so, this is kind of what fueled the recent bubble that we've seen in crypto. This was like almost a year ago. So May last year, articles like this started coming out that said, and I think pretty much every news site put this out in their own words, saying if you bought $100 worth of Bitcoin a few years ago, you'd be sitting on 75 million now. So when these articles started to circulate, what this did is it brought crypto to the masses. It really put it on the forefront. Before last year, Bitcoin was really this fringe thing that we would have to try to convince people was legitimate. And now there's no question. And also articles like this, I think was around the same time. Ethereum is up 4,000% this year, and the world's elites are all buying in. Just to give you an example, Rocky and I first started investing and trading Ethereum when it was $1.50, and right now it's trading over or under $1,000. So it's just had incredible growth the past year or two. But on the flip side of that, we're also seeing a lot of Bitcoin obituaries. So our friend Ophir over at 99 Bitcoins, which I'm sure a lot of you guys know, he has this section called Bitcoin obituaries, where every time somebody posts an article calling for the death of Bitcoin, they like to post it there. And it's really funny to go back and read some of these. So this is the beginning of January 2015, when the price of Bitcoin was $200, right? And they're like, oh man, Bitcoin's dying, it's falling apart, right? So one thing that I tweeted a week or two ago was, whenever the price is high, whenever Bitcoin's price is bullish, the media loves to pump Bitcoin. They love to talk about how great it is. And when the Bitcoin price crashes, they slam it and talk about how it's going to die, right? And so the people that read those articles and make their investing decisions based on the media, they're the ones that typically lose the most amount of money. So we're going to show you how to get on the opposite side of that. Now, how do you get Bitcoin, or how do you get altcoins? Which, for anybody that doesn't know, altcoin means alternative cryptocurrency. Basically every other crypto outside of Bitcoin, and there's over 1,500 of them at the moment. You can either buy them with fiat currency, right? Like you can take US dollars or euros or yen, and you can go online and buy them from an exchange, or you can buy them from another person, right? You can mine them, right? We're not going to talk about mining today, but mining is basically where you buy computers, either CPUs or GPUs, and you buy equipment and hope to profit over time by supporting the crypto network. You can earn them, right? You can get paid at your job or for doing jobs, getting paid in Bitcoin or another crypto, or you can invest and actively trade them, right? So you can grow your wealth through actively buying and selling. And that's what we're going to talk about today. How do you look at the market and understand when is the right time to invest? When is the right opportunity to make a trade and profit through buying and selling actively? And when is the best time just to kind of sit on the sidelines and do nothing, right? So there's actually 5 different ways that you can trade or invest in cryptocurrencies. So you could either buy or short. We'll talk about shorting in a second, but you could participate in what's called the spot markets, basically where you're buying the crypto asset, right? Like Bitcoin, Ethereum, Ripple, on and on, right? So you can buy or sell the actual tokens. You can also buy or sell futures contracts, like here in the US last month, or I guess 2 months ago, the Chicago Mercantile Exchange launched Bitcoin futures contracts. You could also trade stocks and ETFs that are related to cryptocurrencies. So we have other financial derivatives, meaning other financial markets that are being launched. We're seeing options. We're seeing, Switzerland and other countries that are coming out with ways to participate in the crypto markets through your regular stock brokerage account. Also ICOs, initial coin offerings, which is new cryptocurrencies that are super risky, especially right now. And then traditional, what we call early stage venture capital. So say you're an entrepreneur and you want to start a company that has software related to cryptocurrency or a website related to cryptocurrency. Well, you could raise money the old fashioned way through angel investors or venture capitalists, right? Or you could be an investor like I am in startups. All right. So those are really the 5 ways. And what we're going to do is we're going to talk mostly about the spot markets, right? Like how to buy and sell the actual cryptocurrencies or crypto assets themselves. Okay. Now, how do you do that? How do you get started? Well, there's 5 steps to start trading this stuff. The first one is you sign up with a cryptocurrency exchange or exchanges. And for anybody that's used to the stock market, you don't actually need a broker to trade with cryptocurrencies. You just trade directly through the exchanges. And what I think, and again, this isn't like financial advice, but I think everybody should own a little bit of Bitcoin just to be able to learn the basics, right? Like buy some of the top cryptocurrencies and just learn how to send and receive them for a few days to a few weeks, and then you sell it for a profit. Do you want to be a scalper, aka a day trader, and maybe make a career out of this, right? And then once you kind of understand what you're doing and you've picked a style, you want to get prepared and get signed up with exchanges and go through that process and then wait for the best trading opportunities to come along. A lot of people have what we call FOMO, fear of missing out, and they're just like, let me sign up today so I can just buy on Monday and hopefully retire a multimillionaire on Friday, right? And whilst that's worked for some people, if you do that and you just hope to get rich quick just by doing nothing, your odds of failure are pretty high. So get prepared, wait for the best trades, and when one comes along, be ready to take it and then properly manage your risk, right? And go ahead.
It's absolutely important to make sure you trade in the right market conditions that are conducive to your trading style. I mean, if you're a surfer, you're not going to surf when there's no waves, right? You got to make sure there's really big waves. You also might not surf if there's a tsunami, unless you're absolutely crazy. If you're a skier, you're not going to ski in the summertime. So don't try to force trades. Once you identify what style is suitable and you find consistent results, just make sure you understand how to identify the market conditions are conducive to that, and don't trade in conditions that aren't.
Yep. And that's what we're going to talk about today. Like, what are those conditions? So just to do like a quick comparison, like trading Bitcoin versus the stock market for anybody that's like traded stocks. With Bitcoin, there's no account minimums. Like a lot of people that first come into this, they look at Bitcoin at, $5,000 or $10,000 or $20,000. And they're like, oh, I can't buy a Bitcoin. Well, you can actually trade fractions of a Bitcoin. You can buy like $5 worth of Bitcoin if you want to. Versus if you're going to day trade the stock market, you need at least $25,000 to meet the pattern day trader rule. You can also trade directly through exchanges, so you don't need a broker. There's way less trading competition than the stock market. Like I talked about earlier, there's a lot of high frequency algorithms and big Wall Street firms that are trading the stock market. And, trading financial markets is a competition, right? So like if you're in a market where you're like Michael Jordan playing against middle schoolers, you're going to do really well, compared to being like, 5'1" and trying to play in the NBA, right? That's really what the difference is like in Bitcoin, there's so much new money flowing into the space that's just a lot easier to trade than the traditional financial markets. And so what happens though is in Bitcoin, we get bigger price swings, right? There's more volatility, which means there's more opportunity for trading, right? That's my other beef with the stock market is for the past few years, there's been hardly any volatility. So active traders really have had nothing to do, And then just kind of comparing crypto versus other investments, like right now we're in a super low interest rate environment. So like in a savings account, you're basically going to lose money after inflation, CDs, pretty much the same thing. Real estate has been appreciating at about 7% a year, but after maintenance and stuff, your net returns are around 3 or 4%. And a good return in the stock market is 10% a year, right? Like a good passive investment. With cryptocurrencies, Bitcoin again was one of the best performing performing currencies in the world for the past few years. And what we do is we actually aim to profit no matter if Bitcoin's price is going up or going down, right? So what we do is we take active trades. So we buy and sell actively, looking to make anywhere from 15 to 30% per trade on average. And sometimes it's way more, sometimes it's less, but that's kind of like our goal. And we trade both sides, right? We're not just like buy and hodl investors, right? And that's kind of a real common theme in the crypto space, is kind of like this unspoken agreement between people, like, I won't sell if you won't sell. Well, you know, we don't subscribe to that. We subscribe to risk management, disciplined trading, and really understanding the right timing, right? Not just be buy and hope investors. Now, one kind of final thing before we dive into the charts and the examples here is there's 4 what we call capital buckets for cryptocurrencies, or 4 different places that you can really allocate your capital. The first is what we call cold storage investments, right? So this is like, say you buy Bitcoin and then you put it on a hardware wallet, right? Which is a little USB device that you can leave at a bank or bury in your backyard or something, in a safety deposit box or in a safe or something, right? Where this is crypto that you look at as a store of wealth, right? Like if anybody owns precious metals like gold or silver or platinum, you don't speculate with that, right? That's like just a store of wealth. It's a hedge against inflation. So that's one place that you could put capital. Another is what we call position trades. So this is where you're going to hold for like 1 to 3 years and then take profit when the market goes into another boom cycle, which we'll show you. The third capital bucket is what we call short-term trades. So this is where you could like swing trade or take some day trades. And then the fourth capital bucket is like actual investments in startups, right? Either through ICOs or traditional venture capital. So those are kind of the 4 ways. And you might look at that and say, all right, Chris, well, I want to be as active as I can. I want to make as much money as I can. I want to learn short-term trading. I want to learn investing in startups. I want to have some position trades, and I want to have cold storage investments. Or you might say, look, I just want to know the kind of the longer term cycles, and I want to be a position trader where I buy low and then I'm able to hold for several years and make a great return on my capital, right? Or anywhere in between. Really, you have to sit down and go, okay, what are my goals? What do I want to do? Now, let's talk about the cryptocurrency bubbles and the 5 market cycles. So before we dive into this, I just want to make sure you guys can still hear me clearly and you're ready to move on. Guys, if this makes sense and you're excited to jump into this, just type a number 5 in the chat room. Let me know that the audio is still good. You can see this screen, everything makes sense, and you're ready to jump into this. Just type a 5. Awesome. Cool. Thanks, guys. So this is, again, this is the real like meat and potatoes of the strategy of what we do. And we're going to go through kind of the theory, like the 30,000 foot overview of how to do this. And then we're going to show you some examples and some trade alerts that we've sent out and some recent trades that we've taken. And then we'll talk about the boot camp for anybody that wants to go through that. And then we'll do Q&A and we'll do some live market stuff as well. So awesome. Let's go ahead and jump right in. So I talked about this in one of my last YouTube videos, but I just want to cover it again because I think it's really important. You know, in the media, the buzzword about Bitcoin right now has been bubble, right? Everybody's been talking about a bubble for over a year now. And just to kind of talk about what a bubble forms when speculation outpaces utility. Basically, when you have people that are just buying something because they think the price is going to keep going up forever, that's a bubble. Utility is people that are actually using it, right? And over the past 6 months, we've seen a lot of people buying Bitcoin just because they're speculating that the price is going to keep going up. So that's created a bubble. And the biggest mistake that a lot of people make is they think that just because Bitcoin is in a bubble, that it's going to die or it's going to go away. And that is the most untrue statement ever. In fact, Bitcoin's gone through about a half a dozen big bubbles, and each time the price has gone higher over time. Now, will that keep happening forever? I have no idea, but that's been the pattern over the past almost decade now. And each time after it goes higher, and we have that bust cycle, it creates just an incredible opportunity for people that don't let their emotions get the best of them. You know, and this is kind of the first example. So this is where I first heard about Bitcoin, where my hedge fund buddy sent me an email and he was like, Chris, I just, you know, I think it was like right over here. This was the spring or summer, summer of 2011. And he sent me an email. I was like, hey man, I heard about this thing, Bitcoin. We've been talking about it at the office here and it looks interesting. What do you think? And it was kind of on the backside after this bubble was popping. I'm like, man, I've seen this pattern. This kind of looks like a penny stock pump and dump. And granted, at the time, I didn't know anything about decentralized currencies. I just, I was completely focused on the futures and stock market and getting more and more frustrated with how difficult that was becoming. But I saw it went from 50 cents to $32. And then you can see a few months later, it crashed all the way back down to $2, which was kind of like that pre-bubble pricing. And then fast forward a couple of years, this is where it got on my radar again. It was the spring of 2013. And I was like, oh man, this is not going away. Like what's happening here? And this is where I became really interested. It went from $35, topped out around 266, and then crashed back to 50 and then kind of stabilized. And I was like, okay, there's definitely something here. This isn't going away. It's not dying. What's all this about? So I spent literally the rest of that year just geeking out on crypto and going all in on this. And then this happened. So this was the China bubble of 2013 and 14. And the reason why I call it the China bubble is China played a big role, right? Like there was a lot of trading volume and activity and mining and just user adoption coming out of China. And so what happened is you can see here in about a month or two, the price went from like $100 up to over 1,000. And then for the entire year of 2014, it came all the way back down to pre-bubble pricing. Right? Keep that term in mind, pre-bubble pricing. So it went up and then it deflated. And then here's last year. I think this is a weekly chart. So this is the beginning of 2017 all the way to the highs up around 20,000. And the lows last year were around like $700 or $800. So it had a gain of over 2,000% in 1 year. And so is that a bubble? Yep. Does that mean that Bitcoin's going away or it's going to die? Not at all. And let's analyze this price pattern. Okay. So this is where you really want to pay attention, because if you get this right, if you understand the bigger picture and you know where we are in the grand scheme of market conditions and you adjust your strategies accordingly, it's going to be so much better for you than if you just say, wake up and you read the newspaper and you're like, honey, I heard Bitcoin's hot right now. Let's just buy. And then you're the one that ends up buying at the high, right? Instead of doing that, I want to show you the strategies that work best for every phase. Cool? All right, awesome. Let's dive into this. So step one is accumulation, right? This is where things are real cheap. And usually, the market is kind of dead. There's not a whole lot of hype or activity around a market. And look, by the way, just a caveat, this 5-phase cycle works for all markets, not just Bitcoin. But it's particularly clear in Bitcoin because of its user adoption and the growth of its value over time. But after early accumulation, we go into what's called a healthy trend, where things start to pick up. We start to see more and more positive articles and more media coverage and more investment capital coming in, right? And we were predicting this, by the way, back in like 2014 and 15, like we knew that Wall Street was coming, right? That was kind of the term, was like, guys, Wall Street's coming. It just needs time. And that's what we saw happen a couple of years ago in 2016, was that kind of early healthy trend. And then you can see going into 2017, in the last half of 2017, things really started to pick up. And what we noticed, and I'll explain what these numbers on these blue boxes are in a second, but what happened at the end of last year is we went into phase 3, which is an unsustainable parabolic move. This is where the price just goes up like a rock. So what happened was, where we had a nice trend and the market was making reasonable gains, and it was a healthy trend, it was sustainable. When it went from $8,000 here in November to 20, almost call it round up, call it $20,000, in about a month, it went up 150% or so. That is unsustainable, right? So it's, imagine like an airplane that takes off of a runway, right? So here it's good, it's taken off. And then for whatever reason, the pilot just cranks back and like points the nose of the airplane straight up, right? Eventually what's going to happen is the plane is not going to have enough momentum to keep going straight up. And it's kind of like a rocket, right? If you ever shot like a bottle rocket into the air, once it slows down and it loses momentum, oftentimes it comes back just as hard, and you get phase 4, which is the fast pullback, right? And then kind of phase 5, which is what we're going into now, and which is why I'm so excited, is we're going into a period of high volatility. Okay. So let's actually go through each phase step by step and kind of zoom in and talk about the mentality that the market has and some of the best strategies that you can deploy during these times. Okay. So this is zooming in again. This was the China bubble of 2013 and 14 here. And then this was 2015. So for the entire year of 2015, the market bottomed out. Rocky, what was the trade alert we sent in January?
I think it was dipped by around 180 area.
Yeah, 188 rings a bell. So yeah. So anyway, guys, the second week, I think in January, we came back to pre-bubble pricing, right? So the market, and we're kind of missing some data on this exchange, but you can see that the price action went from like a little healthy trend to parabolic really, really fast. This was only like a month, and then it took a year to deflate. But once we came back to pre-bubble pricing, we started accumulating, right? And accumulation, is basically another term for like investing, right? It's where the market cycle, like there's no hype here. Prices are low, right? They're flat. It's kind of a boring market. So like this year was not very fun to trade, but it was a good year to accumulate Bitcoin or to buy it, right? And I know, hindsight's 2020, right? It's easy to look back and go, oh, well, you woulda, coulda, shoulda bought, but that's what the market cycle was telling us, right? We had come off of a big bubble pattern. We had bottomed out around pre-bubble pricing, and we had a range in between $200 and $300. So it sounds kind of funny today with how much volatility we have, but imagine for an entire year only having about $100 worth of range in Bitcoin, which it was pretty insane. So market
sentiment that year was fairly low. It wasn't really a great year for trading, but great year for investing. And usually the reason why that happens is because a lot of the new money that jumps up in the highs, they get shaken out of the markets. And some of them, if they capitulate and sell at a loss, then they might not be coming back. So that's generally why, volume and volatility are fairly low. And that's when you come in it's the stealth phase, the stealth phase of accumulation where the smart money comes in. And I remember at the time, the suicide hotline was being posted on Reddit, on the Bitcoin subreddit. And like literally around that same time, we saw news headlines that the New York Stock Exchange was investing in Coinbase. Yep. So all of a sudden, there was a disparity between the fundamentals and the technicals. Technicals saying, wow, we capitulated and it looks like everything's dead. But the fundamentals are saying, hey, Bitcoin's here to stay. Wall Street's starting to get in on this nice and early. So people better start accumulating. So that was the market sentiment at the time.
Yeah, that's a good point. And just to give you guys like a little story of how like this is real life. Like back here when I posted that blog post that I thought Bitcoin was in a bubble, I got some emails. I actually got a lot of hate. There were a lot of like older people that had been in crypto for a while that were like, Chris, why are you hating on Bitcoin? Like you have no clue what you're talking about. And I'm like, look, I'm not technical. I'm not a programmer. I'm not a coder. But what I understand is mass human psychology, and I understand how emotions drive prices in financial markets. That's what I've been geeking out on ever since high school. Like I've studied that stuff so much, and I think the concept of money as a social construct is so interesting. And so I knew what was happening here. I obviously I didn't call the top or anything like that. That wasn't my goal. My goal was just to help people understand what was happening and why price was going up so fast. And so I actually got some emails from people that were like, hey, like after 2014 blew up, got emails from people that were like, hey, Chris, thanks for the warning. Like what you said made a lot of sense and I saved a lot of money. And I also got emails saying the opposite. Like, Chris, I was the guy or I was that lady that bought up here and then panic sold the lows, right? Because everybody knows like, it sounds so ridiculously simple, buy low, sell high, right? Everybody knows that. It's almost just a stupid cliche at this point. And everybody knows the quote, Warren Buffett's quote, buy when people are scared and be scared when people are greedy. But, I've had kind of I guess the pleasure of being able to talk to thousands of traders over the years. And I can tell you like with a lot of confidence that most people get it wrong. They know what to do, but because of their emotions, they do the exact opposite. And that's why we do these classes is to try to help you guys see the other side of the coin. Okay, so let's pick up the pace here. So phase 2, early trend. Okay, so this is going into 2016. And I want to explain what these blue boxes are. And this is a tool, by the way, that if you have either Coinigy or TradingView, you can use this tool, which basically shows like price ranges over time. So you can see here like the market, and what we call this market structure. So the market had a very clear structure. It was a very clear trend where we would go into a channel. Basically, price would go sideways for some time, and then it would break out about 50 to 75% or so. So like you can see here that during the first one going into 2016, we had over about 213 days of sideways action. Then we had another breakout of about 60%. And about the same time, a little bit shorter, 210 days. And then we had a breakout where we went up another 65% or so. And that one was a little bit shorter, 122 days. And then we had another breakout of over 60%. And that one was only 80 something days. And then we had another breakout of over 60%. And that one was even shorter, 68 days, call it 2 months. So this was like, 4 months, 3 months, 2 months. And then here we went from 5K to 8K, another 50 or 60% run in about 1 month, right? So if you notice the pattern is the market structure, the gains was about the same, but the difference is the time that it was taking to make those gains was getting cut down by about a third each time. And so that's why we call this a healthy trend. Like this is sustainable, but the faster it gets moving, and again, like last year around this time is when we started seeing all of those articles. Like if you had invested $100 in Bitcoin several years ago, you'd be worth millions now. Like, so that's what attracted a lot of buyers. And then if we zoom in, so going into the second half of 2017, here's where things got a little ridiculous, right? So we went from 8,000 to 20,000 in less than a month. So instead of doing another 50 or 60% gain, we went 150% in the shortest period of time. And in a couple of my YouTube videos, I was actually doing videos way back here, the second half of 2017, like trying to prepare people for like a parabolic move or a bear market. And you guys should just read some of the YouTube comments. I mean, it's crazy how nasty people can get whenever you talk about the price of Bitcoin potentially going down. But there's a reason why I'll take the unpopular move, because I don't want people to get hurt, right? And so that's what happened. We had the unsustainable parabolic move, 8K to 20K. And then here's what happens in phase 4. And this happens over and over and over again, not just in crypto, but in any other market. Could be stocks, could be commodities, whatever. Anytime you have a parabolic move, right? So parabolic from 8K to 20K, what usually happens is you, in phase 4, during the fast pullback, you will do a 100% retracement of the parabolic move, meaning from the start of where things go parabolic, the market, and again, this isn't 100%, but if you look at bubble cycles over all markets, like the probability is extremely, extremely high that when you top out and you get the rocket that runs out of steam, you'll pull back 100% of that. And a lot of times you'll actually overshoot it, and you'll go much lower than most people think is rational, right? Just like you never know where the top of a market's going to be. You never know how deep and how much panic will play a role, because, you know, guys, you know why price goes up and down. It's not some magic force in the markets. It's people, right? People are what drives this price. It's greed, it's emotion, it's real life, right? It's not just magic candlestick patterns that you read in a book and then you're like a master trader. What happens is, you know, if you understand the mass market sentiment, basically what people are thinking and doing, and then you apply that to the charts, these squiggly lines on the charts make a lot more sense, right? So that's where we are today, as we're hovering in between 8 and 9K. And then here's phase 5. Okay. So we're now going into high volatility. Okay. So what causes high volatility, and what does that mean? Well, for the past 2 or 3 years, we've basically been in a straight bull market, and then we've had a big sell-off, right? Let me take a sip of water here. Now, what's happened most recently is the market sentiment, meaning like the broad opinion of the market, went from greed over here to now fear on the backside, right? So knowing that emotions drive the market, what was previously driving the market up, aka greed, is the opposite, is what's driving it down, fear. And I can tell you, the people that chased this bull run, this parabolic run, are typically the people that panic sell the big dips in the market. So they literally do the exact opposite of what really smart and rational people know to be true. But when emotions come into the markets, it's amazing how you'll just do the exact opposite, even though you know you shouldn't. I mean, I've gotten recent stories of people that like put their wedding funds into Bitcoin at like 18,000, or people that like took mortgages or car loans. Like that is probably, whenever I start to see that in the media, that is the biggest sign that a pullback is coming. And then, so here's what happens is, after the big pop to the downside, what causes big volatility, and by the way, see this yellow box, like as low as like 3,000 or 4,000 and as high as 16,000 or 17,000. I wouldn't be surprised to see big price moves over the next few months inside of this area. And so here's why. You know, people that, you know, a real kind of common word in crypto is buy the dip, right? Buy the dip, just buy the dip, just buy the dip. And if you do that after a parabolic move, you're going to get run over, right? Buying the dip works really well on the front side of a trend, but when you're on the back side of the trend, what happens is, sure, you can buy dips, but you don't want to just buy and hold and hope that that's the low, because bag holders sell into pops. Okay. What I mean by that is, like, let's say that like you get a big dip and it bounces 50 to 100%, right? Like if you go from 6,000 to 12,000, that's 100% gain right there. But people that bought back here might go, oh, I'm back to break even. And then they sell, right? So that's what I mean. Like bag holders, people that bought back here on pops, they're going to sell into that. And then disciplined traders typically wait for high probability setups. That's what we're doing on the backside of this is we're trading the volatility, but we're not just buying the dip for our capital bucket number 2, which is position trading. We're taking faster trades. We're in and out a lot quicker on the backside of a trend.
Yeah, that's a very key difference in dip buying, because you look at the front side and the back side. There are some really nice bounces, but on the front side, you hold the dip, it breaks out, goes into new highs. Whereas on the back side, you better set some sell targets, because there's the chances of it going into new highs anytime soon are much smaller than when you're on the front side of a bull trend.
Exactly. So here's just a recap. Step 1, accumulation, right? Things are slow. The smart money is quietly accumulating. Then you have a healthy trend where you have a high, more market participants and more capital coming into a market. And then you move into a ridiculous, unsustainable parabolic move. You get the fast pullback, and then you go into high volatility. So that's where we are. And just to clarify, I want to give you guys like some bullet points on the best strategies. We kind of touched on this a little bit, but I want to give you guys which strategies specifically we deploy for each of these phases. But before I do that, I just want to kind of give you guys a definition and show you how to profit when price falls. It's called shorting. I know a lot of you are probably familiar with this. Some of you that are new to trading may have never heard this term before, but shorting is just basically what you do when price falls. If you want to make money when the price of a market goes down, imagine when you buy and you go long, you buy low, sell high, right? Well, shorting is just the opposite. It sounds complex and weird, but it's so simple. You literally just sell first. The price goes down and you buy back lower and you keep the difference, right? In theory, if it works, right? If it goes against you, you can lose money. But here's an example from 2014, which, when the market in 2014, so again, this is 2014, right? You can see it started the year off around $1,000 and then ended the year down around $200, right? So literally the entire year was for the most part downtrending. Now, if you were a buy and hold, or if you were a hodler during 2014, and if you never touched it, right, and you just held forever, you'd be in the green right now. But a lot of people that were, buying back here, they actually panic sold on lows. So instead of doing that, when you're in a bear market, instead of just buying and holding, you can actually make more money by shorting the breakdowns, right? And that's what I was experimenting a lot with in 2014. And I think I was the first guy to do a public video on YouTube about shorting Bitcoin during that year, because it was such a better strategy, right? So when the markets are downtrending, shorting can be a really great opportunity. So just to give you an example, so this is a really nice breakdown pattern that we had in 2014. Let's say, and I'm going to use just real round numbers for this example, but let's say you short at 450. So you sell, let's say 100 Bitcoin at 450. Price falls, right? This is a daily chart. So you hold it for say 2 days or 3 days and you get a bounce, and say you close here at $400, right? So that's a profit. That's a difference of $50, right? You sell at 450, you buy back at 400, you have a $50 difference. That's your profit. So $50 times 100 Bitcoin, you made $5,000, right? So that's just an example of how to do that. And the reason why I wanted to define that first is because when we talk about the best strategies for market cycles, this becomes particularly relevant. So here we go. Phase number 1 during accumulation, this is the best time to quote unquote invest or buy and hodl or whatever you want to call it. This is the best time to invest for the long run, but it's boring for active trading, and that's okay, right? Not every day in the markets has to be a home run, right? It's all about understanding in the grand scheme of things where you are in market conditions. So accumulation. Number two, the early trend. So when you're in an early trend and you have clear market structure, the way that we like to trade this is we take breakout swing trades. So whenever we have a clear breakout, we take a swing and we also buy dips, and then we sell into big price moves. And we'll show you some examples and some actual trades that we have taken over the past month or two. And then when things go parabolic in phase 3, this is a sign to take profit from those long-term holds. And you can also start to short when the trend loses steam. Right now, I'll tell you, shorting can be really risky, especially if you're trying to pick tops. But this is really the first time that you want to consider shorting. Like when you're in accumulation phase or like an early trend, shorting, you're probably going to get run over a lot. But after things go parabolic, that's when you could start taking longer term profit. That's when you can begin to become interested in shorting, right? Phase 4 on the fast pullback. This is where you can have breakdown swing trade shorts, kind of like the example I showed you before, where maybe you short and you hold it for a day 2 or 3. I generally don't like holding shorts for a long time just because they're typically more risky. But also during the fast pullback, you can also buy the dips, but for the most part, you want to sell into prior resistance. Like if you're buying the dip during a fast pullback, like you don't want to just try to hold that forever. Like you want to be real aware of your risk management and where you're going to take profit. And then phase 5 during the high volatility, this is where we're going now. This is where we typically start to take more range bound momentum trades. Okay. What I mean by momentum trades is like more short-term, still take like breakouts and dips and shorts, but we're more disciplined with our profit targets because price is mid-range, meaning you're not making like new all-time highs. You're not in just a straight bull market, right? Like you now have established support and established resistance. So you just want to become more disciplined as a trader. And I always say, like, everybody's a freaking genius in a bull market, right? When price is going straight up and everybody's making money and the train's trucking along, everybody feels rich and they feel like geniuses. But when things are mid-range with high volatility, this is where you really have to implement risk management. And if you don't, you're going to get run over. And then guess what, guys? What do? We go back into phase 1, accumulation, and rinse and repeat. And the cycle plays over and over and over again, just like we've seen, until either the market or stock or commodity or whatever either dies or it has such big user growth and adoption that we find equilibrium in the price, right? But that's what Bitcoin has been doing for the past several years. This is why I've loved trading cryptocurrency so much, is because of this big pattern. And this is why I think it's just a great market for individual traders, because yes, Wall Street is trading this stuff, but it's way less competitive than anything else I've seen. So before we move on, let me just ask, guys, is that helpful? Does that make sense? Does this clarify anything for you? Do you guys see the value in understanding kind of the bigger picture move? Just give me a yes or a hell yeah or a Y in the chat room. And if you guys want to dive into some actual trade alerts and some trade examples, we'll go ahead and do that next. And Rocky, anything else to add to that?
No, you pretty much summed it up there.
Awesome. So
like the room's on fire.
Yeah. Cool. Okay. So what we're going to do is jump into some examples, and show you some trade alerts and some trade examples and just show you how like we put this theory into practice, right? Because we're actual traders. Like we don't just teach this stuff. Like we do it every day. I'm taking my jacket off. It's a little warm in here. Okay, so this is just an example of last summer. So 2017, the summer, this was kind of a zoomed in view of phase 2, aka the early trend. This is where we basically implement dip buys and breakouts. Rocky, you want to talk a little bit about the dip buy here in July?
Yeah, absolutely. Absolutely. So basically market, broke out into a new range, went up to $3,000. It was starting to break down. That was during the altcoin summer. Altcoins were hot. They all went parabolic. Sent out a trade alert to our crew and basically told them, you know what, I'm cashing out on all my altcoins and I'm hedging into USD. And I was actually one of the very few people who did that before the big drop. If you'll look at a lot of the altcoins back then, a lot of them topped out. And so then the market started to dump. And initially I had my targets around $1,300, but then I started to notice market sentiment that a lot of people were sitting around waiting for $1,300. And then I thought to myself, isn't that interesting? A lot of people sitting in cash wanting cheap Bitcoins. Well, the market doesn't work that conveniently for people, does it? So I pulled the trigger right around $2,000 as the market came down. The next day, it went down a little bit lower. And so I was watching on a smaller time frame on the 1 hour chart. As soon as we broke out of an immediate bear channel on the 1 hour, pulled the trigger on a margin long to add to my spot long position. I did go all in on that trade and basically rode that trade up to the $4,000 to $5,000 mark and then started to scale in there before the next dip set up.
Yeah. And by the way, guys, so what we're talking about here is like active trading. This is in addition to like the position trading capital, right? These are like short-term trades where like, say you buy low and you hold for multiple years. That's great. But in addition to that, you can actively trade the momentum and ride the trend and stack capital more than just buying and holding, right? And so that's what we did. So Rocky had his dip buy here at 2K, bought the breakout here at 3K, bought the dip again at 3K, bought the breakout at 5K, right? So this is where we had that really nice market structure that was in play. And this is kind of what our trade alerts would look like. So Rocky sent this one out. This was, what's this one? The break of 5K. So like we got in around 5,200 and then closed, around 7K almost. So this is what we mean by like swing trades. So this one was probably 3 weeks, like a 2 to 3 week hold.
Yeah.
Yeah. And so whenever we send trade alerts, guys, usually what we do is we have a watch list. So we say like, hey, this is the trade we're looking for. If we hit this area, this is what we're going to do. And then whenever we pull the trigger on a trade and we have an entry, we send an alert for that. And then whenever we get out of a trade, we'll tell you what we did. So like for this one, it was like closed 30% of the Bitcoin breakout from 5,300, made 33%, wanted to take some profit, blah, 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 right? Whatever the reason is, right? We'll just kind of explain our thoughts about the market. And one thing that you guys will notice that we do a lot is we sell part of the position, meaning like, let's say you buy, I don't know, let's say you buy $10,000 worth of a crypto and then it gets to your first profit target. Instead of like selling the whole position, you could like sell 10 or 20 or 50 or 75, you can sell a percentage of that position and let it work. And I'll show you some more examples of why we do that. But this was more recently. So what Rocky also does is, from time to time in the watch lists, we'll give a more in-depth thought on the bigger price patterns, right? So this was on December 9th when price was starting to top out here around 15 or 16,000. Rocky sent this talking about kind of the bigger picture. He said the Bitcoin markets have been in an aggressive FOMO stage leading up to the US futures launch, right? Fear of missing out. Things are going parabolic. The markets are currently going vertical, which is unsustainable. Market cycles usually end with a parabolic blow off top where the price goes vertical and sentiment is filled with euphoria, right? This is where everybody's cheerleading the price. Everybody's like, hell yeah, Lambos, we're getting rich. I'm going with my realtor to look at mansions tomorrow, right? Bitcoin had several of these boom bust cycles already, and this chart is starting to look like 2013 all over again, right? Like, keep in mind, guys, we have been through this before, you know, like there've been a lot of like quote unquote crypto geniuses and crypto gurus that have come into the space over the past year that have never been through a bear market. But we've lived this before, so we know what this looks like. So Rocky said, my personal strategy, I've been warning of the possibility of a bear trend for weeks leading up to this launch. The current spot markets have increased much higher than my original targets. So there's always the possibility I could be wrong, right? Like we're never calling for tops or bottoms. Like we just, you know, we trade around our plan. That said, with such high prices, my strategy has been changed from previous years. In 2015 and 16, my goal was to trade to accumulate Bitcoin, right? Accumulation phase, because I knew we'd hit another mega bull cycle with new highs. But now that the market looks peaked, my strategy is to trade, so to actively trade to accumulate fiat, right? To accumulate dollars. That way, if we do hit a bear trend, we're going to have more capital, more dry powder ready so we can buy our favorite coins at bottom barrel prices, right? So that's why, you know, again, everything we do is tied to the bigger market cycles. So that was that. Just to show you, so this was going into the end of the year and then over the past few weeks. So this was Ethereum. This was a big breakout trade where the market was basically consolidating for about 6 months. And then we actually bought the breakout here at $400, took profit in the $700 range, and then scaled out all the way as high as 1300s. And then I actually just recently closed the last part of my runner around 900. And so we'll show you kind of step by step how this looks. So this was a chart from the initial breakout day. This was what, 11/23, so November 23rd. Rocky said started scaling into Ethereum on this breakout with a target at or below 800. So our initial target on this was in between 750 and 800, right? So talking, and I saw a couple people ask about risk management. What we do anytime that we take a momentum trade like this, either a breakout or a dip buy or a short, what we do is we predefine our risk to reward. So what we do, and you can see, I mean, this is a tool that you have in TradingView or Coinigy, where you can identify your risk and you can identify like your longer term profit targets. So what we'll do is we tend to stay away from trades that don't show a bare minimum of a 2-to-1 reward to risk ratio. What that means is for every trade that we take, we want to see the possibility to make $2 or more for every dollar that we risk. Right? How that's different from what most people do is most people don't even think about risk. They just get into a trade and hold on for dear life, right? What we do is we try to time it precisely where we're getting in at the right time, and we identify our risk, basically the maximum amount that we'll lose on a trade. Right? Now, of course, things can happen where the market surprises you and it goes, you know, below your stop area. But for the most part, you know, you really want to predefine this. So once we got in, we had our first profit target identified. So we were risking about 30% to make about 100%, right? So risking $3 to make 10. So that's about a 3-to-1 reward to risk ratio. So that's why we took this trade. It was a multi-month big pattern. And look, we're not like a lot of traders that'll try to like scalp and trade in and out of these little pullbacks and these little moves. We like to wait for the big plays, right? So this was on December 13th. So after holding this for a couple of weeks, I sent this alert out, said I just closed 20% of my ETH breakout in the 730s. Beautiful trade. No sign of weakness yet, but I always like to take something off the table when we hit my main profit target. And the reason why I wanted to show this is because this is my style. This is what I do. So whenever I get to my kind of rule in my trading plan is when I get to the point where I'm at my first profit target, I always take part of the position off the table. So in this case, I only closed 20% because I thought it was going to go much higher because there was no sign of weakness yet. And then, so this was in, I think this was like January 2nd, said my last alert was on 12/13 where I closed 20% of this trade. Since then, been letting 80% of the position ride from the 400s. I'll look to scale out another quarter to half in the next couple of days around the $1,000 mark, right? Big emotional number, unless we blast through it, which I'll just trail a mental stop. Another home run trade and an example of how you can trade less and profit more by catching the big moves, right? Don't obsess about all these little trading days. Just focus on the bigger picture and trade less, profit more, right? And then this was a few days later when we got to a measured move where it was at 250% from our breakout trade in November. So this was, holding for about a month or two. Took 20% off in the 700s, right? And then I took some more profit around 1300. Okay. So the trend's still intact, but with the crypto universe looking heavy right now, close another quarter of that, right? So that's typically how I'll manage my trades is I like to just take partial profits, right? Get to a profit target, take a piece off. If it looks strong and you think it's going to keep going, you can adjust your risk, meaning like trail stops or adjust where you'll let the market retest and stuff like that.
Looks like you sold the top there, Chris.
Was that? I guess so. That was around 1400, right?
Yeah, I'm in a killer trade right now with Ethereum Classic. That one's ramping up like a beast right now.
Nice. Well, yeah, we'll jump to the live charts in a second. But so just to point out though, guys, I guess that was around the top. But I didn't close the entire position. Like I actually had about half of the position still riding and I got out the rest of that at 900. So you'll notice I actually had 3 different exit areas. And the reason why I like doing that, and I don't do it for every trade, but for most trades, I do that. And the reason why is it removes the stress of having to be perfect. Like whenever I get out of a trade or I take profit, I don't know if that's the high or low. All I can do is, manage around my expectations of what I think the trade's going to do. But at the end of the day, I don't know. So to remove kind of that pressure of being perfect, I just scale out and I let the trade work. So my average exit was probably somewhere closer to 1,000. Right? $1,000. So, it was over a double, which is great. But I didn't get all out at the top, right? We had that as a measured move. We knew that was a big, strong area. So I took some profit. But I did get stopped out over here. So that's the Ethereum trade. Let's take a look. So this was also around the same time, or actually about a month later. So mid-December, we had a breakout trade on Ripple here at 30 cents and kind of the same thing. Took profit at $1, took profit at $2, and then took profit up around $3. So that was a massive, massive gainer. And it's funny. Well, it's not funny, but it's interesting that when price was somewhere up here, this is where CNBC started pumping it and actually teaching people how to buy Ripple on live TV. And then when it crashed, they were doing other segments on how to sell. So you literally had CNBC freaking teaching people how to buy high and sell low. Oh man, drives me crazy, guys. Anyway, so let's look at some alerts. So this was actually a watch list alert. So we have trade entry and exit alerts. This was a watch list. So my first profit target on this was 60 cents, which looks small in hindsight, right? But we didn't know where this thing was going to go. Said watching Ripple. This is not an anticipatory trade. I'm holding some long-term Ripple from last year. So I actually had a bunch of Ripple from half a penny, but I was going to add on a break of 30, looking for a quick double, good risk to reward, but definitely not looking to jump the gun. And then it was like a couple hours later, the trade actually triggered. Said I didn't expect Ripple to pop right after my watch list alert, but I don't like chasing big green candles, but I started to scale in and just, kind of explained like my entry strategy and how I scaled in. So I got fills in like the low 30s all the way up to like 40 cents. And then, took profit over the next few weeks. And then here's kind of a longer term play that we'll talk about. Like Stratus is one of the biggest like percentage gainers in crypto history. We accumulated back here around 3 cents, took profit in kind of the early trend, and then more profit into the parabolic move. But the reason why I wanted to share this is the same price pattern that we saw with Bitcoin, right? Early accumulation, then early trend, healthy trend, parabolic move. And then what you don't see is on the back side of this, it actually crashed back to pre-bubble levels and then went on to make a new high of over like $20. I think it was like, $21 or $24, something like that. But overall, just really, really great momentum and volatility. So I know I'm going pretty long. I want to get to the live charts and some Q&A. So I'll finish this up. And then if you guys are cool with it, I will tell you about our boot camp for anybody that wants to trade with us and learn from us. And then we'll jump back into the live charts and the Q&A. So here's just kind of my prediction for 2018 real quick. I'm thinking that 2018 is going to be the year of high volatility, meaning we're going to be seeing big swings, both to the upside and the downside. And where the media and like old school investors are scared of the word volatility, it's our best friend. It's the best market conditions. When you have big volatility in the market and you know what you're doing, that can be awesome. Now, if you're an emotional trader and you don't know what you're doing, you can get chopped to pieces during volatility. But again, big price swings equal opportunity. When a market is dead and flat or just range bound, there's no opportunity, right? I mean, you can accumulate if you're in accumulation phase, but yeah, there's really no opportunity. So how do you profit during crypto market crashes? Well, like we've talked about, everybody's a genius in bull markets, right? But real traders can thrive during bear markets. And keep this in mind too, guys, when prices are high, trade the volatility to grow your fiat currency so you can reinvest during accumulation phases, right? And again, I'm not a financial advisor. I can't look at your 401k and tell you what to do. But I will just tell you my opinion is that when price is high relative to where it's been, that is not the time to go all in, right? That's the time to be an active trader so you can grow your fiat holdings. That way, when there is a crash, you can buy back lower, right? And then you can also use hedging strategies to protect your crypto holdings during crashes. We don't have time, unfortunately, to talk about that today, but that is something we cover in the boot camp. So just a quick recap of what we've talked about so far. Talked about how to trade and invest, the 5 different crypto market cycles. We've talked about the best time to quote unquote invest in cryptos and when to stay away and when to actively trade. We've also talked about how to manage your trades, looking at risk to reward, right? Making sure that you have like a 2-to-1 or better risk to reward, and how not to chase the hype, which is the biggest cause of big losses, right? If you chase hype and you chase what's popular, you're going to end up on the wrong side of the market. That's where the biggest percentage losses come from. We've also talked quite a bit about how to understand and profit from mass market psychology, right? So if that makes sense, if everybody's with me on that, just give me a quick why in the chat box. And if you guys are cool and want to hear about the crypto boot camp that we do, just give me a yes or a hell yeah. And I'll tell you, for anybody that's interested in this, how you can join it. And again, it's not for everybody, but I'll tell you kind of who it's for. And then we'll jump into some Q&A and some live charts. Awesome. Thanks, guys. So I know we're running a little over, so I'll do this quickly. Again, I'm not going to give you like a big song and dance. I'm just going to tell you what we do. And if you think it's a fit for your schedule and your budget, cool. If not, that's okay too. I'm going to send you my book after this. But for anybody that's like, hell yeah, I just want to jump into this and learn A to Z what to do and how to trade this and trade with us on a daily basis, that's who this is for. So what we're doing is usually every month we open in between like 25 to 40 spots in the boot camp. So today we're opening 25 spots. And that's a real number because Rocky and I are, we're just two people. And you'll notice when you get in these classes, it's small groups. And so how this works is it's 8 weeks of daily lessons. So they're step-by-step lessons to show you how to trade and invest in cryptos. This is like, we used to have a course a few years ago. There was just kind of like it was a course with videos. And then we expanded it into this boot camp where we have exercises and practice sessions and really just methodically taking you through everything that we wish we had when we first started. So phase 1 is actually the first 4 weeks of the boot camp is what we call like the learning curve, right? This is where you learn everything that you need to know. Week 1, this is where we, work on your foundation, talking about technical analysis, all the basics of wallets and how to get set up and security and stuff like that. Week 2 is all about fundamental analysis, right? Like how do you find profitable coins early? How do you sift through the scams? Week 3 is all about market psychology. So understanding yourself, market sentiment and broad market sentiment. Week 4 is all about, kind of the nitty gritty of strategies, right? Like our actual trade setups, the entries, how we time and have confidence and know when to pull the trigger. And then after the first month or the first 4 weeks, phase 2 is actually about applying what you've learned and developing your skills in the live market, right? Like I'm a big believer that trading and investing is a performance activity. It's like chess or golf or poker, right? It's like high stakes where you first have to learn what you're doing and then practice and apply your skills. And that's what this is about. Week 5 is all about preparing you for live trading. Week 6, there's a lot of practice trading, testing your execution. Week 7 is really about journaling and learning how to analyze your execution, basically look at what you're doing and figure out how to get better, right? And then week 8, this is where we do a lot of trade reviews and talk about growing your trading size, right? Like a lot of people just want to, go all in on their first trade, but we subscribe to the wisdom that you want to start trading small size, risk a little bit of money, develop consistency, and then, grow your size the responsible way, right? Don't just swing for the fences and go YOLO all in, right? Like be smart about it. We don't want anybody ever blowing out an account. There's just no reason to do that. And then, so what we do is we have weekly live classes. So the lessons, the daily lessons are pre-recorded where you go through that at your own pace. So it doesn't matter where you are in the world. You can follow that at your own pace and you get lifetime access to those lessons. But also you get weekly live classes where we go through these lessons, we answer your questions, any exercises or examples that you want to review, and we do record these. So if you're not able to make them live, you can still send your questions in and get them answered. Now, in addition to the 8-week boot camp, the folks that want to get started with us today, we're also going to throw in some bonuses, which is our trader and investor community, right? Like the trade alerts, the trading room, all that really fun stuff, right? Like the boot camp is teaching you what to do. It's literally A to Z, how to do all this stuff. And then our trader and investor community is what we do every day, right? It's the chat, it's actual execution and trading along with us. So bonus number 1 is our trading room. We actually recently switched over to Discord for anybody that's familiar with that. The feedback has been absolutely phenomenal. We have a couple of different channels where we have, like a live markets channel. We have a channel for miners, ICOs, the mental side of trading. general chat, right? So we break that up, and it is moderated. This isn't like a troll box with a bunch of idiots screaming at each other. Like that, there's everybody from brand new that have never traded before to whales that are just crushing the markets, right? So that's the trading room. And then every day, Monday through Friday at 12 p.m. Eastern time, we do a daily live market class. So we spend about an hour or so on the mic, just like we're talking to you now. We dive into the live market. We review our open trades. We talk about any trade alerts or watch lists that we've put out, what we're looking at, any big news, just to really help you stay dialed in. And this is kind of like home base for a lot of people. Like we have people that log in religiously every single day, and they've done that for a long time just because they get so much value out of these daily interactions with us. And then we do trade alerts, right? Kind of showed you some examples of those. We give you trading plans to kind of show you what we're expecting ahead of time. Then we have alerts showing you when we buy and sell. And then we usually do a recap showing like a step-by-step through the trade or through the idea. All right. So that's what that's all about. So what's the investment? Well, again, this is a really intense 8-week program. And if you were to go on our website and buy it, the regular tuition is $29.97. But for the 25 folks that get started today, we're going to give you $1,000 off. So $19.97. And again, that gets you the boot camp and the 60 days in the trading community. And then any of our boot camp graduates, that usually the next question is, well, how much is it to stay in the community? Any of our boot camp graduates, we give a 50% discount on that subscription. So it's like $97 a month if you want to stay with us. And again, we are capping that at 25 folks today. So if you want to get started with us, here's the link. Just go to skillincubator.com/bootcamp, and that will put the discount in there. It'll make sure you get the 60 days access to the crypto trader and investor community. And again, just to do a recap of this, and then we'll jump into the live charts. And Rocky, I know you've got to go pretty soon, so we'll get to Q&A here. But the daily lessons, I want to clarify, like these are about 30 minutes on average a day, but it's self-paced. So if you fall behind, you can get caught up really easily, and you get lifetime access to these lessons. So like it's structured as an 8-week program because we want to get you through this as efficiently as possible. But if, say you go on vacation or you're working or something, like you can always go back and review those lessons. And also we have, exercises and quizzes to help you develop your skills. And obviously we have a great support team in case you need help with anything. And then the weekly live Q&A classes, these are Wednesdays at 2 p.m. Eastern time, and they're recorded if you can't make it live. And then the trader and investor community, we have the trade alerts, we have the trading rooms. There's actually multiple channels now, and the daily market updates, which are Monday through Friday at 12 p.m. Eastern time. Okay, we found that's kind of the time zone that works for the most people around the world. I know, some people that's the middle of the night, but we've tested different times, and that seems to be the best one. So for anybody that wants to join us today, we'd love to have you. Just go to skillincubator.com/bootcamp, and then we'll go ahead and jump into some Q&A. What do you think, Rock?
Sounds good. Let's do it.
All right. So I'm going to open up the chat, guys. And now just keep in mind, whenever you go to chat, there's a little drop-down box that either says chat or Q&A for an answer. If you do Q&A, there's a better chance that we'll be able to get to your question because the chat sometimes just gets going so fast. So I'll go ahead and open that. But if you have a question, try to put it in the Q&A module. That way we don't miss it. All right. So just open that, and yeah, if the website went down, just give it a second. Sometimes when too many people try to load in there, yeah, it looks like it's loading for me. So
we have one question. Why do you trade in USD and not BTC? Is it not better to accumulate BTC? Well, when the price is high, it's better to trade in something stable like USD. And, during that last major drop that we had, people who were holding a lot of crypto and didn't have any USD, they didn't have firepower, ammo to maximize profit on that bounce play, and they had to contend with a major drawdown. So that's a huge difference in accumulating it on a healthy bull trend.
Yeah. So Alejandro, if this helps, when price is cheap, we trade to accumulate Bitcoin. When price is expensive, we trade to accumulate fiat currency. So I saw a question, are the daily updates recorded? Yes, these daily market updates are recorded Monday through Friday. How do we get trade alerts? Lorna, those actually come through Discord. And the cool thing about Discord, actually, here, let me just show you real quick. You can get push notifications on your mobile phone. We used to do email, but we found that just getting a push notification is way faster, and people seem to really like that. So let me just show you this. And actually, I'll pop up this link as well. And come on, Discord. Can you guys see this, by the way? Awesome. All right. So basically, whenever we put out a trade alert, you'll get a push notification on mobile and your desktop if you're logged into desktop. So you'll see like we'll give the alert, we'll give a link to a chart that you can pull up. And a lot of times we'll have our trading plan actually on the chart so you can see exactly what we're doing.
I'm just typing out some answers to questions and then deleting them once I answer them so that we don't
awesome
answer them twice.
Yep. Yeah, so Rocky's knocking out some questions in the chat. I'll try to do some on the microphone too. When does the boot camp start, Jojian? So it's self-paced. So if you sign up today, you'll get the first lessons right away. You'll get week 1 right away. Awesome, Goldie. How do you calculate your risk to reward? Mark, it's different on each trade. But we show you methodically like how we analyze risk, and it depends on the trade setup. So for example, like a breakout trade, we're looking at risk to reward differently than like a dip buy or a short. We have about a half a dozen trade setups, and each setup has its own like risk profile.
Someone's saying cannot pay with a credit card for the course.
Yeah, if you guys have any issues, I'll just put the email in here. Just shoot us an email, support@skillincubator.com. And then, yeah, if you have any problems with the technical stuff, my support team is really awesome. So, did you warn your members when Bitcoin was at the highs? Yeah, I don't know if you were in here at that time. Road Grip, I think. I'll show you this. This was our alert on 12/9 when we were up here, basically talking about how we were going into the full parabolic mode. Was looking like 2013 over again, and Rocky strategy, how he was basically selling back into USD. Right now that the market looks peaked, my strategy is to accumulate USD. So yeah, absolutely. That, you know, we've actually been preparing people. We've actually been preparing our students for the crash for several months. We didn't know where the top was going to be, but the biggest thing was just when the market goes parabolic, sometimes it happens quickly, right? Sometimes, let me pull this back up. There you go. Sometimes, you get like a weak parabolic move, and then on one day it panics. Sometimes it takes over a month. So that's why we were trying to get people prepared way ahead of time.
Hey, I just in Discord, I just shared a link of a tweet that I posted literally like $20 from the top on market
Nice.
psychology. I'll just post that in the room for anybody who wants to see that.
New paradigm taking over the world.
That was the market sentiment at the time. You know, people were just calling for 100K immediately.
Yeah. All right, cool, guys. Well, this is the link. I'm going to pull up my charts. Just go to skillincubator.com/bootcamp. And we'll jump into Rocky. We can talk a little bit about ETC too, because I think that's an open play that you have, right?
Yeah, that's my biggest right now. This one's turning into a friggin' grand slam.
Yeah, the scaling might be a little small. I'm actually going to make that bigger.
Well, someone's asking, will there be another dip? There's always another dip.
Nope, never. The price is going to keep going up for all time without any pullbacks. All right. Yeah, Henrique, if you already joined the community, just shoot us an email and my team will take care of you. David, timing's not good. We'll do the boot camp later. Yeah, David, just shoot us an email whenever you're ready and we'll let you know when we have the next slots open. That means that you trade in a bear market with USD because of the stable fiat. And at that moment, when you were a bull market, stick. Well, so here's what we do. So I just want to kind of clarify like the idea of trading for Bitcoin and trading for fiat. So when price is super cheap, right? When price is down here, anytime like we buy or sell, we're accumulating to stack Bitcoin, right? Like we want more Bitcoin. When we're up here and we're buying and selling during like all this action, when price is expensive and very volatile, we're trading looking to stack and accumulate more USD, right? That way, when we go into phase one again, when we hit accumulation, right? Like say we bottom out and then we go into accumulation. That way we have capital to reinvest for a longer term hold. That's what we mean by that. Yeah, let's take a look at ETC real quick too, Rock. So I'll just pull up your trade alert. So this is one, guys. Rock, do you just want to talk us through this?
Sure.
It'll probably be faster than me pulling up this.
So basically, this is a combination approach that I used. I hunted for a dip buy. So I was looking at technical. So basically, anytime the markets have a massive sell-off and dump, you'll always find me in the trenches hunting for some dips for a nice bounce play. Even on bear trends, my targets will be shorter. I won't necessarily trend ride unless it turns into like an actual bull trend. Now, in this case, I picked ETC for two reasons. Number one, it had bled out like just about everything else, and I was sitting in a bunch of USDT and USD on multiple exchanges. And number two, there was an airdrop coming at the beginning of March. So I knew market sentiment. So that was a fundamental news event, but I knew market sentiment would likely start to FOMO into it, therefore giving an additional edge for wanting to buy in on this dip. And so far right now, it's just popped a straight double or higher from the bottom. And
what were your entries on this one, Rock?
Initially, my first entry was right around just above 20, like around 22, 23. And then my second entry was around 15, nice. 16. So I averaged down larger orders at the bottom. I sent out an alert. I told people, I said, I'm starting in, buying at support. And if this breaks down to degenerate levels, I've got much larger orders waiting down there. And it actually tagged right into them, like right on the nose. And on the initial bounce up, I locked in a bunch of profit just to take risk capital off the table and to lock in some gains and profit. And I'm just letting the rest ride until the end of the month. And we'll see where, where that could end up going.
Nice. Oh, that was ZEC. I was looking for those charts. So, what's your expectation for this one? Are you looking for a new all-time high? Are you looking for an extension? What's the play?
I guess it really depends on this. So this one's more of a time based trade because there is a fundamental event, almost like CME futures, right? Like CME futures, that launch was the top. We could end up seeing some FOMO leading up to that. So I don't know if that's going to take us to, $50 or $100, or if we just become range bound. So far, it's got good volume. It's got $1 billion in volume. I would obviously resistance would be up at closer to the $50 area. But if I do some extensions, I think 70 and if we break all-time highs, big if, 70 and 100 seemed like interesting areas.
Mm-hmm. Yeah, we've got a couple nice measured moves to this level.
Yeah, so we'll see. It's going to be time based. Now, something else, I'm gonna play the backside of this too, because on the day of the airdrop, I'm gonna have my finger on the short trigger to pull the trigger and short, sell on the news kind of short, because once the airdrop's done, chances are whales and traders will all start dumping. So I might, I'm going to be watching very, very closely, because not only can I make a bunch of money on the front side for the markets going up, but I could also make money shorting it on the way down. I got to keep my eyes on it and watch it live, but I'll definitely be in the trading room with folks, and everyone knows my plan. Oftentimes when I'm talking about my trading plans, our traders know my plan like a month ahead of time, most of the time, because I'm usually looking for the bigger moves, like the CME futures being the top and stuff. I was warning our traders for like a solid month prior to that, right? So my plans, like I've already got a plan like 2.5 weeks out, 3 weeks out.
Yeah, so that's the really good point, is just thinking, like I was writing some notes, just having a look at all forms of analysis, right? Like not just the chart, but putting the chart, the technicals together with the fundamentals, and then having a plan for like what the catalyst could be in the future to take profit, right? And if you can get those things to line up, that's what really just creates a nice, well-rounded trade where you know why you're getting in, what your timing is, you have good risk to reward, right? So guys, this is just a good example of like something that's open right now with a kind of a clear plan. And what's really interesting is whenever you're looking at a chart and you create like a story, right? Like you have a story for why you're getting into something. A lot of times you'll notice that, if you have all the pieces right at the right time, like you'll be able to capitalize on a move that kind of goes against the overall market sentiment, right? Like if you look at, say, the top 20 or 30 coins, you've got most stuff that's down a few points, couple that are up a few points, but then you've got kind of this outlier here, ETC up 17%, right? And the reason for that is you have all of this stuff that kind of came together at the right time, right?
Yeah, absolutely.
Yeah. There's, and here's the thing, like some people, like I get emails every day and some people are like, hey, Chris, is now a good time to do X, Y, or Z, or is the party over? And my response is always like, well, look, I'm not a financial advisor, so I'm not going to tell you how to like manage your portfolio, but just keep this in mind. There's always another trade. Like these markets aren't going anywhere. If anything, the capital is flowing in so much that governments and centralized exchanges, like old school exchanges, are creating derivatives to trade around that. So if anything, these markets are just going to continue to grow. The party's never over, as Michael said.
It's over when you're smoking cigars on a beach, retired.
Yeah.
Even then, it's probably not over. You'll still be trading shitcoins.
Yeah. Okay. So I'm going to try to go through and answer some questions. Carlos, Carlos, just shoot us an email if you're having any issues with that. Support at Skill Incubator. We can help you with that. Kind of scrolling back. I know we missed a lot of questions, so I'm going to try to go through as many as I can. George, with the significant rise in popularity in crypto, do you think we'll go into a long-term bear market like in 2014, or do you think it'll be a shorter market as the market matures, or do you think the market fears will be amplified? So that's actually a really well thought out question, George. So one thing that I'm not trying to do right now, let me just start with what I'm not doing, is I'm not trying to pick a bottom. Like, I don't know where the all-time low is going to be again. What I'm doing is, like, I've taken a couple of like smaller bounce plays through here, had a couple of shorts on the breakdowns. So I'm in short-term active trader mode. And what I'm expecting is higher volatility over the next, like, if I had to say, like 3 to 9 months. You know, like, we've got a really, really big range that we could see big volatility in. And unless there's like a major fundamental news, like, I don't know, anything extreme, like on the extreme bull side, like the US government declares Bitcoin its official currency, right? Like, that's like the most extreme scenario, or the extreme bear scenario. The US, UK, and Australia and Canada have deemed cryptos illegal and nobody can ever trade them again, right? Like, aside from big fundamental events, black swan events like that, I think what we're going to see through like most of the end of the year is bigger volatility. And if we go back into, say, phase 1, where we get accumulation and we start to see support holding, that's where I'll start accumulating. If the volatility stays high, I'm going to stay inside of that like short-term trader mode, right? So that's kind of my plan. A direct answer to your question about the bear trend, I don't know how long it's going to last. All I know is we've given back now 100% of the parabolic move, which is where usually a battle starts to occur, right? You will start to see pops, maybe get into prior support turned resistance, maybe take some swing trades into that. And then if it looks like, say, we go back in and we start to retest all-time highs and say it looks like we're going for 25 to 50K, then we'll start to, you know, hold for longer term targets. But for the most part, like, this yellow box is my playground. This is where I want to be real active in trading. Yeah, I see a couple questions about if we accept Bitcoin as payment. We do, guys. If you go to skillincubator.com /bootcamp, you'll notice on that page that here, I'll just show you real quick. You'll notice right here, you can either do credit card, PayPal, or Bitcoin. All right. Let me scroll forward. With a catastrophic global economic meltdown on the cards for 18 and the US potentially being devalued, how do you see crypto performing? So that's one of those crypto lover. That's one of those like black swan events, right? Like, black swan events, what this does is they typically completely change my current thesis and trading plan, right? And then I make adjustments when, not if, they happen, right? So what I mean by that is, like, if we did get like a big black swan event with the US dollar, or like a big economy, what I'm going to do is, based on that event, I'll say, okay, I'm going to be reactive. I'm not going to try to anticipate that, right? Because it could happen this year. It could happen 100 years from now. I don't know, right? I have my beliefs philosophically about, you know, the Fed and, you know, the current banking system, but it's so complex and there's so many variables that if there's something that I don't know, then I accept that and I say, well, what would I change? What would I do in the event that that would happen? And what I would do is I would analyze that and say, okay, what are the repercussions? What's happened? And how am I going to adjust my plan? All right. Can you share your opinion on the time interval between phases? Yeah, we kind of talked about that, David. Chris, do you like the Kelly formula for calculating trade amounts to enter? Yeah, so there's several different strategies that you can use for position sizing, right? So the Kelly formula is, for anybody that doesn't know, it's something that a lot of big hedge funds use to decide like how much capital they put into investments. I use kind of a modified version of that. But yeah, we have a whole week where we talk about position sizing and portfolio management. Rummy, what's your profit target during volatility? It's different on every single trade, Remy. We look at the trade and we look at the current price structure and we base our profit targets based on what the chart says, not based on like arbitrary numbers. Elias, yep, I'm definitely going to keep doing a bunch of YouTube videos. Chris Stapps, there's a lot of crypto courses out there now. How do you differ? Listen, so there have been a ton of get rich quick gurus that have come into this space over the past year. As far as I know, we are the oldest and one of the largest premium communities. Yeah, I mean, that's it. There's a lot of people chasing the trend right now. We went all in on this when nobody else wanted to. So if you're going to learn from somebody, do you want to learn from somebody who's been doing it successfully for a while, or somebody who just is going to show their Lambos on social media and pretend like they've done well, right? Like that's why we do this. I mean, we've been doing it for over 5 years now. So
yeah, exactly. Do you want to learn from traders who have been through multiple bear markets, through the accumulation phases, healthy bull trends, and the mania, or just someone who just joined in on the mania or in the bull trend? You know, it's easy for people to flash how much money they made in a bull trend and think like they're geniuses and start, teaching other people. But are they going to get to keep their money, right? How are they going to trade the bear trend, or are they going to run for the hills and crop their diapers, right? So who do you want as your general on the battlefield? Someone who just trained with a wooden sword 5 minutes ago, or people have already been through countless victorious battles? That's the way I see it.
Yep. What are your thoughts on NEO in the short term? So guys, I don't typically jump from like altcoin to altcoin when we're doing Q&A, just because we could spend 6 hours doing this. My thing on NEO is I'm neutral. We're mid-range, right? So very similar pattern though. This is actually a good teaching moment. We had accumulation, right? Where we had established support. So there's phase 1. We had phase 2, which was the early trend, right? Much shorter pattern. But then we had phase 3 parabolic and then phase 4 on the crash. So NEO is mirroring, at least over the past couple of months mirroring Bitcoin's price action. It's obviously much lower, but it's dead mid-range, right? Like if we look at a fib retracement of where this stuff really got started, you'll notice we're sitting right at the 50% level. So to me, that says coin flip. Like if you're a holder of NEO, if you accumulated and you're holding and you're 50% off the highs, cool. If you're looking for like a trade today, like I don't see a high probability entry here. And that's usually the case, like 7, 8, 9 out of 10 days, the right action on something is no action. It's only usually like at inflection points, or like when you have an actual trade setup that you want to do something, right? So most of the time what we're doing as traders is preparing, creating a plan, and then only executing a plan if it triggers. Where what a lot of like retail like investors do is they look at something and they say, do I like this personally? And then they just buy it based on a gut feel. We really like to just plan our strategy. Michael, every altcoin had its bubble pattern. How about trading these to gain Bitcoin? Yeah. So that, I mean, that's another thing is anytime you're trading altcoins, you can, and that's really Rocky. What you're saying on that? Trading altcoins for the goal of
basically, trade shit coins to accumulate more Bitcoin effectively.
yeah.
It's the best altcoins ultimate utility is to get more Bitcoin.
Yeah.
It's a killer app. Flip some coins here and there. There's no better way to accumulate Bitcoin than by trading altcoins or accumulate your favorite altcoin. Maybe Ethereum could be tossed into that category now, but you got to wait for the right timing in the overall market cycles. Right now, all I care about is accumulating more USD.
Yeah. Yeah, definitely. All right. So I'm going to jump back over. We'll just kind of keep this on Bitcoin. I'm going to reload that. Okay, cool. Yeah, Will, I'm going to email the book out after the class. So for anybody that wants to cover that, I don't use moving averages. So one thing that I'm just a big fan of is keeping things very simple and, just really using price action and volume. So I've kept the charts really simple today. Rocky, you can still hear me, right?
Mm-hmm. Yeah.
Okay, cool. I think Coinage is kind of locking up here. But yeah, one thing you'll notice is like we don't have a bunch of indicators on our charts. We just really, really keep it simple. Indicators are one of those things that it can add clarity, but it can also add confusion. And I think the best play is just to look at the bigger picture and use what is going to add clarity, not what's going to contradict your plan. If that makes any sense. I know a lot of people like to use like RSI and MACD and stuff like that, they're great tools, but in and of themselves, they're not a strategy. They're just different ways of quantifying data. What's the TA to use to estimate exit points on a trade? So I'm a big fan of Fibonacci extensions. Yeah, look, Rock, did Coinage go down for you?
No, seems to work on my end. I mean, I didn't try. I'm gonna have to bounce soon.
Cool. Yeah, guys, we've been going for about 2 hours. So we'll go ahead and wrap it up here in a second. But I just wanted to say thanks for coming. I hope you got some value out of this. We certainly have a good time whenever we do these. I wish we had more time to do them more often, but we typically do about one a month. Really fun times in the markets. Hopefully you guys understand that, if you walk away with nothing else other than understanding risk management and how to look at the bigger market cycles and then plan your strategy around these cycles, right? Like it's one thing to ask like, hey, if I buy now, is it going to go straight up? It's another thing to say, here's what the market's doing. Here's my plan for the bull and the bear scenario. Here's how I'm going to manage risk. And, yeah. And if you approach it like a casino and not like a gambler, which there's a lot of people that have that gambler mentality in the markets, like approach it like a casino, right? Approach it like a business, even if all you're doing is investing for the long term. But again, you have several options. You can be a swing trader, position trader, scalper, investor, right? There's so many different ways you can play this. And if you want to learn what we do and trade with us every day, we'd love to have you in the boot camp. If not, that's cool too. I'm going to send you a copy of my book and hope to see you guys soon.
Sounds good. All right, folks, take care. And for those who joined, we will see you in our community and we'll trade in the trenches. Cheers.
Awesome. Thanks, Rocky. And if there's any questions you guys want to reach out, you can shoot us an email or we'll see you in the trading room in the trading class, which is tomorrow at 2 p.m. Eastern. So for those of you that are getting started today, tomorrow at 2 p.m. Eastern. So you'll have like a day to start to get stuff set up.
Take care, folks.
Yeah, Tief, here, I'll pull this up. I'm not sure if you came in a little bit late. I'll just leave this up for anybody that wants to see. And just kind of a quick recap for anybody that didn't see this, the trading room. So Discord actually comes with the boot camp. So yeah, the trade alerts, the trading room, the daily live market classes. And again, these are every day, Monday through Friday at 12 p.m. Eastern time. And then the boot camp classes for the 8-week boot camp, these are Wednesdays at 2 p.m. Okay. Awesome. All right, guys. Thanks a lot. Take care. And I will see you very soon.